daily question that I think the industry is asking itself about what is the future of SaaS, what is the future of venture, and is AI part of is it a part of that trend, or is it the entire trend? And what is the opportunity space that comes around? When we think about the opportunity space, we stay grounded around, we see convergence around health, wealth, and privacy. We do think about just what's happening out there.
Health, wealth, and privacy. That's the trifecta that many financial institutions are trying to win. According to Evan Thorpe, a venture capitalist at SixThirty Ventures who specializes in helping large financial institutions connect the dots with a variety of fintechs. So what are the fintechs that stand out in today's environment, and how are incumbents looking at them to rethink what it means to be a financial institution? Evan joins me, James DiBiasio, at the JDB Report. Evan Thorpe from SixThirty, welcome to the JDB Report.
Thanks so much, Jen. Great to be here. Longtime fan of yours, from the pod to the Substack to your writing, and really such a pleasure to be on here. And thank you so much for having me.
Well, thank you, and the pleasure is mine, of course. You are a longtime venture capitalist, but with a core focus on enterprise B2B fintech. And I wanted to speak with you because obviously I write a lot about fintech, so that's of interest, but also just understanding the way that AI is impacting this whole space. And I think, understand that confluence of that plus your domain expertise, just to get a sense of where the action is, what's hot, what's not, how VCs are rethinking the way they look at their strategic advantages, and what the future of fintech is going to look like. So that's all we're going to do today.
Nothing big. It's small questions. Yeah.
So let's get started. Why don't you just really quickly just give us a background on SixThirty, the way that you guys do venture investing, and we'll take it from there.
Yeah, really appreciate it, Jane. Thanks again. I think that, there's a lot of ground to cover there. I think you're asking questions that are on everybody's mind. There's a lot of interlocking aspects of what you described. There's new emergent technologies, the advent of AI in particular. There's the enterprise agenda, large companies. There's people wondering about the future of SaaS, and there's folks thinking about the future of venture. And all of these, whether it's the asset class, the technology, or the domain, all of these areas are interlocking and colliding at the moment. So there's a lot there to talk about, and I'm glad you're asking some big questions here. I'll try to speak to it, from an area where we sit and how we look at things. We occupy a very specific perch in the venture ecosystem. We are headquartered in the United States, but we invest globally. We have been around since the early 2010s. I joined in 2019, and we've been investing across multiple funds over these past several years. So we have a certain amount of a track record and a look back, but what's probably more informative about how we see things and what that perch that I'm describing is that we're backed primarily by large strategics that are financial institutions looking for a investment return on their allocation to venture managers, but also looking for a strategic return, because whether they're a bank, an asset manager, a wealth manager, a large payments company, a global custodian or asset servicing company, any number of different roles that they have as far as their verticals and their lines of business are concerned, involve collaboration with startups, whether it's corporate venture capital and CVC, or whether it's strategic partnerships, or whether it's on-balance sheet investments, or any and all of the above. And so we're primarily looking at, you mentioned it earlier, enterprise B2B fintech, and that that category because that tends to be where the technology is, where the imperative to serve a customer better, whether they're a private wealth client, a checking account holder, a credit card user, a patient, an investor, whatever capacity an individual is, as they're surrounded by the coterie of financial institutions that help them to achieve their goals. That's where we are looking to help bring about that alignment and that convergence. And so that usually equates to being like, seed and series A. It has to be early enough that the clay is still wet, but it has to be mature enough that it's ready for prime time. In a world where folks are prone to kind of move fast and break things in the startup world, moving fast is good, but breaking things is off the table when it comes to mission critical enterprise systems.
You got there in 2019, so you rode that COVID boom through a lot of SaaS companies. That's the biggest category in venture capital across the board. And we're seeing that this year, a lot of headlines, scary headlines about SaaS companies in trouble because of plugins to Anthropic and so on. How much of your theory is built around software as a service? And are you seeing a change? I mean, are you worried about the valuations in your own portfolio?
Yeah, it's a great question. When one considers kind of the evolution of where venture capital, and this is me talking to the guy who literally wrote the book Planet VC about where venture capital as we knew it before and as we know it today accelerated around this asset light model of SaaS being a kind of very good product market fit for the venture investing format. And so even though you had turning back the clock at venture capital and going after, whether silicon chips or defense or any number of cutting edge applications in the hardware and deep tech space, SaaS certainly was the kind of driving force around the proliferation of the venture format in different places. As software was eating the world, venture capital was flowing into wherever that software was being built. And so there are aspects to the moment in time when we were incepted as a firm, but our origin story is really really anchored to that dialogue that happens in the boardroom at large institutions where the CEO, the CTO, the CIO, and the CISO are trying to solve for the future of their business when it comes to the convergence of technology and the needs of their customers ultimately. And the biggest site of that convergence that we see is this thesis around investing at the intersection of health, wealth, and privacy. So again, an individual in their capacity as a patient, as an investor, as a saver, as an account holder, et cetera, with their coterie of these financial services providers around them, trying to navigate a world where you have people living longer, but perhaps retiring at more or less the same age. People trying to navigate a massive transfer of generational wealth, 15 trillion to be transferred intergenerationally by 2030. These are staggering numbers, upwards of 6 trillion in family office wealth. There's a lot shifting in that world that these large financial institutions have been trying to stay out in front of and serve their customers better over this prolonged period of time that was irrespective of SaaS. But you did have, like I said, the CTO, the CIO, the CISO in the room, and SaaS was certainly a component of that. Fast forward to today, and AI is a massive part of that conversation. And that's where we're looking to connect dots between our portfolio, the mandate that we have to invest, provide strategic returns, and where we can ultimately bring value to the founders we invest in through that model as well. It's never been more important for VCs to be able to have something that they can point to and say, like, this is our differentiation. The VC can, of course, sit there and ask the founder, okay, what's your moat?
Right.
Why is your business defensible? Tell me about that. it makes the hairs on the back of the necks of the venture investors stand up as well, because we're there thinking, what is our reason to win? What is our moat? What is our ability to stand out and get in on those good deals where we can find alignment, where ultimately capital is a commodity. You have to differentiate on something other than that, and it's that value add, that perch that we're on, that specific model that we draw upon. But it's a daily question that I think the industry is asking itself about what is the future of SaaS? What is the future of venture? And is AI part of is it a part of that trend, or is it the entire trend? And what is the opportunity space that comes around? When we think about the opportunity space, we stay grounded around, we see convergence around health, wealth, and privacy. We do think about just what's happening out there among individuals and the services that they get from financial institutions, and that's kind of our North Star for are there areas that are big problems that need to be solved, and are we in a position to help these parties get together and solve them?
How recent is this sort of tri-party health, wealth, privacy focus for you? Is this been around for some time, or is this a new thing? And does it dovetail with the rise of Gen AI and agentic AI, or is it kind of separate from that?
Yeah, so we're on Fund 4 now, and it started out as an idea in Fund 2, but it has had iterations beneath it that have come into focus, particularly in the past. Let's say 2 years or so. Some recent, I mean, we're always iterating on where this trend is kind of meeting the road, and specifically how we think about that road with regard to AI and emergent technologies is we're not thinking about the technology in a vacuum, but we're connecting it to where there are enduring sources of value. And that's probably been, if the North Star is health, wealth, and privacy, and what these large incumbents together with startup founders can accomplish together, what tends to move the compass and where magnetic north versus true north sits and where it varies on an annual basis is around how are the layers of the stack shifting with changes in technology. So for example, the framework that we use to think through on this is that you have systems of record. A lot of this is very legacy technology. You have systems of execution, operation, risk. Those are your kind of mission critical risk systems. There's a lot of action that takes place there, but ultimately a lot of that is middleware as well. You have systems of engagement, where you have an individual sitting down and using a piece of software, whether they're a consumer, whether they're the provider, but there's interaction and a real kind of embedded quality to the workflow there. And then you have systems of intelligence. So that framework has been very helpful for us to continue to think through what we're going to invest in a given quarter, in a given year, or in a given period of time is.
What's the play for insurance companies when it comes to wealth? I mean, I know a lot of them are moving in this direction, but high net worth people, rich people, they probably don't need traditional insurance. A business owner might for other things, but and if you wanted to get real wealth, you go to a private bank. So, what is the opportunity you see for insurers to go into this space, and then what's the role for digital insurance, wealth tech, or fintech to give them an edge against, a bank, private bank, or a broker?
Yeah, so I think you've hit on a prime example of the way that we look at it, and that's the point of convergence around the small business. And when you consider it's staggering. The number of small businesses out there, and the number one concern of SMB, of small business owners these days, are their healthcare costs. And a major consideration when an individual is thinking through their wealth is they are looking at their own kind of asset and liability management. And it used to be the case that the house was your biggest asset. Like that was your store of value. That was your rock and your security. Nowadays, with things like, oh, there's a branch, hanging over your tree, therefore sorry, there's a branch hanging over your roof,
Right.
and that roof is now uninsurable unless you do something about that branch or something like that. Or sorry, you're a little bit too close to the floodplain. You're a little bit too close to where there could be significant water damage and a weather event, and therefore you're uninsurable. Now all of a sudden, the home is like this massive source of risk and insecurity, where just a few decades ago it was a massive source of security. So in that moving equation, the small business owners, they're looking at their house as this liability that they have to manage, but they're also there thinking about, well, does my small business represent for me my retirement nest egg? Is this something that the business that I own is going to be ultimately not passed down to the next generation? Maybe it's going to be part of a private equity roll up, and that's where my private wealth is at stake, not necessarily embedded in my home, but in my ability to value, sell, market, run a process around the business that I'm going to offload. That's ultimately going to be my path to retirement. An insurance company and the adjacent asset management and other folks that you alluded to, they're in a great position to be able to work with that small business owner and say, okay, well, look, you're thinking about the future of your business. You're thinking about the future for your LLC, and you're thinking about the future of yourself. And these two things go hand in hand, but insurance products and wealth products aren't necessarily like as
Right.
fluid moving between
Right.
the two.
So
But
what
maybe
kind of
but
so what
maybe
kind
they
of fin
become more
yeah.
fluid.
So where does the fintech come in? Where does the use of data, the ability
Mm.
to manipulate or to move money around? What are some of the ideas that you're trying to put together or pitch to your LPs?
One one area around this is whether or not certain products that were kind of traditionally thought of a certain way are changing. And yes, data works its way into this, but some of this is also just the way in which products are sold and marketed. Insurance being a market and being a product, as you know, that's sold, not bought. But we invest in a company called Bloom Finance, and they are in the home equity release business, and that has to do with an individual who's maybe asset rich in their home but cash poor, and they need to be able to deploy that their own wealth that comes out of their home, but not a $200,000 check or something like that. They want it on a credit card, or they want it on a means of payment that you can draw down on and spend it, $1,000 a time, buy that trip to Europe, whatever it is. So that's certainly identifying payments as an unlock in the technology around it to enhance a certain amount of financial product and marketing innovation. Another example of this where payments is perhaps an unlock and where the data around it helps is we invested in a company called Diesta in Europe, and Diesta is in the business of making it more effective for the premium payments that go through a broker in your insurance, and where your broker gets paid, how your carrier is in the mix, and all of that. So you do see certain tech through lines, as we tend to think of them, in these different businesses. So payments is one. RegTech and compliance technology is another big one. We invested in a company called AI Prize very recently, and AI Prize is all over the world of B2B and KYB orchestration for companies sending money cross-border, whether it's stablecoin rails or traditional payments, where the rails and the format for payments is maybe shifting both domestically and cross-border. That's where KYC is perhaps a solved problem, but KYB is a lot more difficult and much more of a moving target. So we see compliance technology as a real area to drill deeper into and identify opportunities to invest in Asia, in the United States, everywhere.
Privacy, you've mentioned that as part of your trifecta. How do you guys think about privacy, and whose privacy are we talking about? Are we talking about the consumer's privacy, the ultimate client's privacy, or are we talking about some sort of privacy related to data protection at the bank CISO level?
Yeah, it's a great question, and the answer is all of the above. But to give you a little more color around each, you know, there's there's a new victim of identity theft every 2 seconds in the United States, and going back the past couple of years, I think upwards of 2.5, I think it's 2.6 billion personal records have been compromised through data breaches. So there's certainly the end of the chain pain felt by a consumer that certainly happens. There's working backwards from that, the internal management that goes on, where a CISO maybe 5 years ago, and I'm summarizing here, and so I hope any CISOs listening, hopefully give me a little bit of leeway, but 5 or 6 years ago, you got a blank check, and you could add up as many different components into your stack as possible. And then for the past 5 years, you've had this moment of trying to slim that down and make sure that you weren't dealing with a ton of endpoint agents. You weren't managing so many properties that more of your time was spent on your internal technology and external providers than it was about actually being secure, right? That you became more about blocking and tackling and feeding the beast to resource that blocking and tackling than about taking a holistic approach to managing a more secure enterprise. And so AI threw a massive curveball into that kind of consolidation and that cleaning house and that kind of being more thoughtful about your own risk management posture and all the properties you were managing, because now all of a sudden you had to think of everything from shadow AI and how are my employees within our organization managing their sanctioned Gen AI properties that they're touching versus their own personal one, or their data security problems and data leakage that can occur, that can hit you between those two different adoption of AI, sanctioned and unsanctioned. And then you actually have the resources around maintaining the workloads of the back end of AI, if you will, about where these models are running, on whose infrastructure, on whose property. Is privacy being maintained within data in use? We invested in a company in Australia called CipherStash, and CipherStash has patented technology that is centered around how can encrypted data be processed and used at speed and performantly, where a large institution requires that, against the backdrop where maintaining customer privacy internally has never been more important.
How do you see, as we get toward the end here, Evan, I want to wrap a few things up here. So I've been talking to people about cutting edge cryptography-based privacy techniques like zero knowledge proofs, which work very well. They work so well that they probably are difficult for many institutions to accept, because it might even just threaten their own hold over data. There's also embedded or open finance, which is great for consumers and for the end clients. But again, data sharing, setting aside data sovereignty laws and cross-border issues, but just within among financial institutions, they all give it lip service, but not when it comes to the data in their stores. So, what are you seeing in terms of the willingness of financial institutions to embrace accepting credentials in new ways, willing to open the doors where open finance is a two-way street, not just a one-way street? And how critical will it be for them to move to these kind of new models, or are they trying to build things that enable them to not make that jump?
Yeah, fantastic question. We definitely, maybe this is kind of the inherent optimist in me, or the inherent optimism in the job, but there's definitely a very exciting opportunity in embedded finance and an extremely exciting opportunity in making sure that that two-way street is handled responsibly, ethically, and ultimately for the good of all parties involved. It's I think in 2025, 116 billion in embedded finance market value was at stake in that space, and that's projected to be more than 250 billion by 2029. And so you have this absolute explosion in, where does a payment take place? Who is it with? Is the payment stack that's fulfilling it one that's existed for a very long time? Or is it something entirely brand new? I think stables and everything happening there is very interesting, because that's where you kind of have maybe the sockets into the traditional financial firmament are kind of, they are where they are, but what you're constructing, the cord that attaches the two sides, is very much changing. And so what that cord is made of, what goes through it, how large it is, how much will flow, is very much going to be informed by the nature of that embedded finance transaction, not just the nature of it, but the volume of it and who's transacting. Is it a person? Is it a business? It's one thing to check someone's ID, but a business doesn't have a passport, so you can't just use your existing properties to solve that same problem. So the application of ZKP and a few of those technologies that you mentioned is certainly extremely important for data residency. We invested in a company a while back called Kedit that was very much in that space and looking to solve data residency problems. But now the data residency aspect has taken on this multiplicity where all of a sudden, those processes that somebody has on the socket side of where those cords are being drawn hasn't necessarily changed all that much. You still have to ask for the same documents. Your case management properties kind of largely are what they have been before, and these are processes run by people. I mentioned our portfolio company AI Prize before. They've developed an AI compliance co-pilot that's out there to make those teams more efficient and be able to navigate what is an absolute deluge of these payment flows thanks to embedded finance. And another example of where there's interesting value there is like, who owns the checkout button? Is it going to be a large PSP that is ultimately going to occupy that real estate within a large platform, or is that large platform a Shopify or an Amazon or whoever it is? Are they going to be the ones who own that? Do you ultimately have the vendor the supplier actually own a checkout button and own a component of the transaction themselves? I think with everyone questioning where there's enduring value in business, we believe that the things that ultimately bring about value to a business ultimately haven't changed all that much. AI, yes, it's turning the world inside out a little bit, but it's just evolving and changing the world. We don't live on another planet than we do before. It's the same planet. It's just changing. And one example of that is the fact that when you take risk and you get rewarded for that risk, that's an enduring aspect of value creation, irrespective of how AI works its way in. I'm not saying that these things are entirely future-proof, but there's some basic kind of base level value in those. And so the reason why I say risk-taking when it comes to checkout is, how do you maintain the standards of allowing who's going to be in a trusted network of endpoints in a payments network? Right? You look at any of the large payments networks out there, and these are associations of trusted transacting parties. And do you let somebody in? Do you decide to grab market share and be a little bit looser about that? Or is AI a way to actually show that somebody who before, with those old outmoded ways of case management, could be treated as, well, to be safe, let's not approve this transaction, just to be on the safe side? Can you actually show up where somebody is a perfectly fine actor to transact with? They just didn't look like one before because the technology was built 30 years ago.
Evan Thorpe, where can people find you?
I'm there on LinkedIn. You can find me there. Founders who are building in any of the spaces that I mentioned. You can reach out to me. Evan at 630.co is my email. Drop me a line, and let's have a conversation. I'm often in the U.S. I'm often in Asia, and so let's meet up wherever you are. Thank you, Jay. I really appreciate it.
Thank you, Evan Thorpe from 630 Ventures. Thanks for joining me at the JDB Report.
Thanks so much, James. See you around.